Time for the big three. Three stocks, three charts, three trades. Rick Ducat will take us through the charts, and here to take us through the trades for today, Don Kaufman, co-founder of Trade, joining us with three great names to take a look. The first one, Don Kaufman, you're looking at is Alphabet Google. Why is this one on your radar?
Yeah, well, first of all, calling it Alphabet is still tough for me. I mean, like Meta, that's never going to happen for me, right? Facebook is Facebook. Yeah, so what I am inside of Google, Google, I believe, is the absolute pivotal stock right now inside of the S&P 500. If we're going to sell off, it's got to be done on the back, not just of some tech like Facebook, a few of the other ones, including NVIDIA or maybe Tesla, but Google. Google is the outperformer in the tech sector. I don't want to get like outright bearish in here. I just want to sell an out of the money call spread. Volatility is definitely still elevated, even though it's come down a little bit. In this particular trade, I'm actually going to sell an April 14th expiration, and I'm going to be selling the 2960 calls, okay, and buying the 2980s, right? So that is actually the sale of a call spread. It's a sale of an out-of-the-money call spread. It's done for about a $5.75 credit. Google right now positioned very, very nicely for this trade. Again, do I need a down move? Absolutely not, but I definitely don't need a dramatic up move in this particular trade.
Understood. Okay, so tell us more. What do you think, Rick? What do you think about Don's plan here?
It makes sense to me because that was one of the first areas I highlighted on my chart here. If we take a look at point A, I pointed out a double bottom near the 3,000 level. So Don's strike prices are just below where price topped out a bit after earnings. So we had this big surge upward after earnings, but it didn't really translate into a breakout upward. Actually, it broke down quite significantly the next few days. So that's where we are right now with point B. We're at our 21 EMA and our 63 EMA, so our exponential moving averages. That could be some interesting support to keep your eye on going forward, because it also lines up with the white dotted trend line there. So all those things are roughly in around the 2770 to 2800 level. Finally, take a look at point C there. That's the 252 EMA in pink. That was supportive the last time prices took a tumble there. So that could be another point to keep an eye on for potential support going forward.
Yeah, and I think it's interesting, Don, as you said, mildly bearish, bias. So you don't really need this one to go up. I mean, a lot of folks are having some hopes and big bets for tech overall, but you don't necessarily need that. Tell me more about that.
Yeah. No, I want to just flat out crush their hopes and dreams at this point with Google. Again, as I said, I'm selling an out of the money call spread, but I'm going to be very frank. I am outright bearish on tech. I'm even more outright bearish specific to some of the sectors that are strong right now, specifically like, if you look at like financials or energy. But when it comes to Google, again, Google's like the pivotal stock. Like if Google goes down, it's taken us down, bottom line. I mean, if you look at what I call mega market caps, or what I term monsters of tech, all right? So you've had a couple of like these generals, they have fallen. I mean, NVIDIA is on the ropes right now. Tesla down quite considerably. Facebook, nowhere to be seen. What do you got at this point, right? So you got to go after some of the strongest performers. And Google, it is it. Like last year, in terms of the monsters of tech, that was the pivotal stock at that market cap, over $1 trillion kind of club. And again, it's the stock to watch right now.
And, just for perspective, have you ever loved tech? Did you love tech over the last 10 years? Is this a complete 180 from where you've been, or if you've been out of tech in general? That gives us a perspective too.
You're overall asking me if I'm perma bear, and the answer to that is absolutely not. I mean, I just look at opportunity in the here and now. There have been plenty of tech stocks that I've been long for quite a considerable period of time, but at a point in time like this, rising interest rate environment, we're going to be in a quantitative tightening, CPI is going to come out tomorrow, like short duration, tech has been brutalized a little bit, but overall, like we haven't seen big institutional sell side activity. And I don't know about you, but I'm getting excited about the project over here. I mean, we still have an S&P that's trading north of 4,500. So we have yet to even kind of skin our knee versus some of the price action we've seen up since the onset of COVID.
Okay, so that brings us to Meta Platforms. And you were looking at this one, a bullish back spread. Tell us about that.
Yeah. All right, so Facebook, I can't do Meta. I can't do it. I'm not ready myself for the metaverse.
I don't blame
and
you.
I'll tell you what. No, I am absolutely a tech geek. I've got I've got every device surrounding me here. But when it comes to Meta, Facebook, I am looking for either an explosive move up or it's just going to toss the towel in and continue to kind of migrate a little lower. What's kind of neat about this spread, though, is I'm going to use a wildly bullish back spread. And the reason I'm using such a wildly bullish back spread, I don't see much of an in between over here. It's going to have that, that burst, that explosive move up, or it kind of continues to kind of peter out as most of the institutions don't want their name even associated with Facebook at this point. Anyway, the trade is, again, it's a ratio back spread, and it's for the 18th of March expiration. And in this case, I'm actually going to be selling a 220 call and then buying 2 times, the 240 calls. So I'm selling one of the 220 calls, buying 2 of the 240 calls. The trade's actually done for a $2.40 credit. So if we explode higher, when I say explode higher, listen, we got to get back to like 260 to make this thing work. But on the flip side, as long as we're below the 220 level, we're still profitable to the amount of the credit, which is $240 for 1 unit of the trade.
Yeah, Rick Ducat, your thoughts here on Meta Platform, Facebook, as we're hearing more about Don's trade.
I definitely see your point, Don, about tech kind of, being a danger point here, because if it crumbles, it can crumble hard and fast here. And that's what we saw with Facebook. I mean, I didn't bother using our moving averages on this chart because they were so far behind the price action. They didn't really tell us a whole lot. So looking at the standard deviation channels here, the way we derive these is we take our blue linear regression line, that's our line of best fit based on closing prices, and we simply create channels based on standard deviation here. Right now, Facebook is near the -4 standard deviation, so that's quite a significant move. And it seems like that's about where prices have bottomed out for the time being. Now, is this a guarantee it's going to hold? Of course not. We never would say something like that, but this is a place where, based on the math of our previous price action near point A there, that could be a stopping point for this downtrend, or at least a potential stalling point. If we move upward, point B, that's our old highs as well as our -3 standard deviation channel. So these two price areas kind of line up with those strikes that Don was talking about, near about 215 and 245 or so. So fairly close to what Don mentioned. Finally, look at point C. We're in the oversold area for the RSI. Any move upward, we would want to see it probably accompanied by a move out of that oversold area and into just the normal area above the 30 threshold there. That would probably lend greater credence to any move upward.
Yeah, interesting how you stayed away from the moving averages on this one and showed us, the differences here in these deviations. So last but not least, let's get to good old great American company, and that is Caterpillar. Completely different from the first two. Your thoughts here, Don Kaufman, on Caterpillar. Cat.
Yeah, so Cat's actually been channeling in and around, like, let's call it the 190 level on up to maybe like 210. And in this particular instance, I'm just going to it's a very short-term bearish bias for us effectively retesting into that like 190 level. So it's a bearish in-out spread, and it's like one strike in the money, one strike out of the money. This one's for the 11th of March expiration. I'm buying the 205 puts, selling the 200 puts. The trade is done for about a $2.50 debit, but the trade it's much more about just, a bias. It's about protecting yourself. It's about being intact and knowing that your risk is only $2.50 in this particular trade. Again, a very mild bearish bias. I don't ask for much, right? I just need us down a couple of bucks, maybe retesting some of the recent lows of like 190. We bounce back up in the near term, we're going to be okay, because this trade effectively protects us. No stop order needed. You know what your risk is of, $2.50, and we have till March 11th for this to ultimately play out.
Yeah, and I mean, at least you think about the seasonality of things as well, right? Less likely to see a lot of building and excitement surrounding this type of company in the short term, which is what you're doing here. It's affectionately referred to as Cat Tractor on the floor of the New York Stock Exchange. So, Rick Ducat, your thoughts?
Well, you know, for the third time here, I think that's a pretty reasonable strike price here based on what I put together for my charts, because that Don's final break-even point lines up almost exactly with the 252-day exponential moving average there in pink. So seeming like this has been a commonly support and resistance point, just you know, using technical analysis in general for this type of moving average. So we're in kind of a sideways trend lately. So because price is below it, I would say to consider it as a point of resistance here. So price is right about just on the nose here. I think we're maybe 30 cents or so above, 30, 40 cents. So take a look at point A first. If we do start to move upward, point A could be an interesting resistance point. It's our 21 and 63-day exponential moving averages converging right in the same level near about 207. So anytime we have more than one indicator in the same area, it's worth noting, because there's you know, potentially two different sets of eyes, two different types of traders following, you know, these different indicators. They might both be looking at that same price level then. Looking at point B, we have a trend line off the lows here for the past few months. That could be an interesting point to keep an eye on for potential support going forward. That's also around the previous lows. So if we can hold, we made higher lows last time after we bounced off that trend line. So that could be a bit encouraging for the bulls. And finally, one other thing I wanted to point out is point C there. We're seeing a little bit of bullish divergence in the RSI. So that could be a sign of some bullish momentum on the move here.
All right. Well, Don won't like that part, that final part. It is great to chat with you both. I really appreciate it. We've also established that Don is not a perma bear, just to be clear, folks, on that. Wonderful to chat with you both. Thank you. A great big three today. Don Kaufman, TheoTrade, thank you. And Rick Ducat doing a great job with the charts.
Thank you.